We are back once again here on my channel, Survive and Thrive. And I know most of you who have been paying attention to stocks have seen such a drastic bloodbath here in the last few weeks. And I think that into the next few quarters we'll continue to see volatility, especially with the Fed talking about potential interest rate hikes. And what I really wanted to focus on today is how to come up with a game plan to protect yourself and have a diversified portfolio in the times when the high growth stocks and bigger name large caps are really taking a hit. You can see from this list all the big names: Apple, Microsoft, Google, Amazon, Tesla, Facebook, all taking significant hits. And like I said, I think that there's even probably a little bit more pain that is coming. And so those opportunities that you want to look for are maybe the stocks that are a little bit more boring, but tried and true, and will help you ride out the times when we have significant corrections in the market and be able to create those buying opportunities for you to jump in on the names that you have high conviction in, that you want to continue to add to, such as some of these big names that we're looking at in this list right now. Now, jumping into the stocks that I wanted to talk about today, before I do that, there is a video that I covered last year, and it's 5 defensive stock names. A few of those I will be recovering here today, but if you want to check out that video, go to this link, and you can see those names and what I covered at that time. Jumping over to the first company that I wanted to talk about, it's Walmart, ticker symbol WMT. And I know most of you are aware of this company. They're engaged in the operation of retail, wholesale, and other units, as well as e-commerce, and located throughout a bunch of different countries, 24 to be exact. They have 10,500 stores, clubs, and e-commerce websites, and they are the top of the list for Fortune 500 companies at around $524 billion in revenue in 2021. What's really great about this company, go and look, and you can see that they've been fairly stable, even the times that we had the dip back in March of 2020. You can see that they continue to, over time, increase in value. And being that they have so many different locations and they are a global presence, it really makes them a very stable company to invest in. And so that's a big reason why I'm mentioning that this is one that you want to be in if the recession does hit. You can also see that they've had a very good history of paying out on dividends, starting back from 2013. And you can see that it continues to grow year to year. And at its current ex-dividend date of December 9th, 2021, 1.53% yield, or 55 cents per share. So that's a pretty good way to also help stabilize through the volatility cycle, is to find these defensive stocks that also pay you out a dividend. And every stock that I'm going to cover today has a dividend payout. The next company I wanted to talk about is also involved in consumer staples, and that is Albertsons, ticker symbol ACI. And you can see that at just under $30 per share, it's a pretty cheap stock to buy into and be able to build a fairly substantial holdings and help you to ride out the bad times in the stock market. And this is a company that I actually bought into at their IPO, and they were around, let's go look at their chart here real quick. So they were just above $15 per share, and this was back in the middle of 2020. And I continued to dollar cost average into this company. They've been as high as almost $35 per share for the day of November 1st, 2021. And so they've had a bit of a sell-off since then, but I think that this is also a great buy-in, and it's a company that also pays out a dividend. But before I jump over to the dividend, I wanted to cover A little bit more about what this company is about. So outside of the consumer staple aspect, they also are a drug retailer in the United States. They offer grocery products, general merchandise, health and beauty care products, pharmacy, fuel, and other items and services. They have approximately 2,278 stores across 34 states. And so that goes to show that they've got a pretty good spread across the country, which makes them also fairly stable. And now let's jump over and take a look at their dividend history. So you can see for ACI, like I mentioned, they are fairly new to coming out with public share access and investing opportunities. They've tried this on a few occasions before without success, but it seems like this time it has gone through and stuck. And they're steadily also growing their dividends over the years. And so I see a very good investment in a cheap per share price to be able to build up very quickly for the long-term future and to be able to help you ride out those valleys when the stock market isn't really performing as well. The third company I wanted to talk about today is in precious metals, and that is another place that investors will go when the stock market is starting to fail. And this one is Kinross Gold, ticker symbol KGC. You can see that they're just under $6 per share, so very cheap to get into and be able to buy quite a few number of shares depending on access you have to money to invest. And you can see that they are involved in gold mining and related activities, including exploration and acquisition of gold-bearing properties, extraction and processing of gold-containing ore, and reclamation of gold mining properties. They've got a number of business segments. You can see their headquarters is in Toronto, Ontario. And they also produce and sell a quantity of silver. So gold production and exploration activities are carried out principally in Canada, the United States, the Russian Federation, Brazil, Chile, Ghana, and Mauritania. They are very well adapted and spread out throughout the globe. And precious metals is a place to go and have it be a safe haven asset. Once again, this is also a company that has a dividend payout and has for a number of years. And so I'll jump over to that chart here real quick and we can take a look at that. So you can see that they are not as high in terms of the dividend yield, 2.03% or 3 cents per share, which equals to an annual dividend of 12 cents. But like I said, this per share price at under $6 per share can get you in very quickly. And if we jump back to their chart and we look at the 10 years, you can see that the times that we've had significant sell-offs or corrections, that precious metals acts as an inverse or safe haven compared to significant corrections within the market. And so that's why I really like this company, and not just having money in gold physical, but the gold mining companies or the companies that are actually producing the bullion or coins / gold bars. And so this gives you that option of being able to have money invested in gold without having to actually physically have it in hand. So you can see that in 2020 it did make a dip as well, but over the last 10 years, depending on where you're at, does have some fairly significant volatility, going as much as $8 or $9, close to $10 per share at some points. And so I think it's a good one just to help ride out the wave and be able to still continue to collect those dividends for each quarter. And like I mentioned, that's the biggest aspect I wanted to focus on today. You want to find these companies that are stable, been around for a number of years, at a fairly cheap per share price that you can load up on, as well as taking advantage of the dividend payout. So I really just wanted to get that out there. I know A lot of people are concerned. There's a high rating on the VIX or the fear index, and so a lot of sell-off. Will that continue? Potentially. And so you really want to put yourself in a position to diversify and ride out the times when it gets rough. And this is an opportunity or approach for you to be able to do that. So I know that there are plenty of other companies that are within these specific stock sectors. And for those of you who have comments about that, please put those below so we can share with other fellow YouTube viewers to be able to have that same opportunity to look for those places to protect your portfolio. And it's just a free exchange of information, helping each other out in this YouTube community. And that's what I'm trying to do this year, is build up my community with the number of subscribers that I have and my ability to help others. But the only way I can do that is with each and every one of you. So make sure you turn on the bell, hit the subscribe button, and if you've gotten any good information out of what you've heard here today, please hit the like button. That really helps the algorithm and search for those that are looking for videos like this to get this information and make the best informed decision as an investor. So stay strong, keep the faith, look for these opportunities to protect yourself for future volatility and stock market corrections. As always, make it a great week. Keep your ears close to the ground and don't just survive, thrive.